own sweet home. I dream of my own sweet home. Right here, right now, Amit Inamdar will show you how. Call Amit and you are set. Or just visit ownsweethome.net.
DRE license number 013555222N and MLS number 236574.
Only real estate show filled with credibility, authority and expertise. Every Friday 4 p.m. only on Radio Zindagi.
वेलकम दोस्तों, मैं हूँ हरलीन और आप सब लोगों का मैं स्वागत करती हूँ ओन स्वीट होम पे। बहुत ही बढ़िया ये शो है जिसको हम पावर आवर कहते हैं एंड ऑल यू हैव टू डू इज ट्यून इन और कान लगा के सुनिए क्योंकि टुडे वी हैव अनदर एक्साइटिंग शो विद अमित इनामदार। यू गोइंग टू गेट अ पावर पैक 30 minutes of information on real estate and loans. Let's see what Amit has in mind for today's Power Hour with Amit Inamdar. But before we begin, just want to let you know that all of you can give us a call at 510-770-1550 to ask a question on the radio. However, for some reason, अगर आप tune in नहीं कर पाते हैं, you can just go on Amit's website, that is ownsweethome.net, and click on the radio link, submit your question, and we will take it on the show. Welcome to the show, Amit.
Welcome. Thank you, Harleen. How are you today?
Wonderful. Fridays are always good.
Wonderful. Hello, friends. Own Sweet Home, and welcome to my show, Power Hour with me. Today, we are going to focus on qualifying for the home mortgage. When I'm doing, say, an open house, I see many buyers who are just looking. First thing I need to know from them is how much can they afford? And many of them don't even know. To help all home buyers and give sellers I represent a peace of mind, I have created a PowerStart Home Loan Qualification program. And that's PowerStart that will get you to a confident start in your next home search, knowing that what you qualify for, and you can then target the neighborhoods and the home that fit your budget.
Absolutely. तो we have lots of questions, but मेरा पहला सवाल ये है कि भाई जब हमने सोचा कि हमें घर बाय करना है तो is that the right time to think about budget कितना होना चाहिए या यार पहले हमें ये पता होना चाहिए कि घर का buying process क्या है and then बाद में देखेंगे budget. So from a timing point of view, would you suggest that the decision that what is your budget comes first?
Of course, the budget is always going to come first because you don't want to be in a situation, Harleen, where you go see the home and you like it and then you kind of make an offer, your offer gets accepted and you then realize that you don't qualify to buy a home. And because of that, it's always a good idea to get the qualification done up front. Now, there are two types of things. Like one is, of course, a pre-qualification, which can be done over the phone. So you just call me and say, hey, Amit, this is how much I make, and do you think how much I can buy a home and things like that. And based on some few questions I ask you, I'll be able to tell you how much you qualify for.
Got it. We have a caller coming in. जल्दी से उनका call लेते हैं. Hello, you're on air.
Hello, Own Sweet Home.
Hello.
All right. So when I start your qualification, the PowerStart is a process where I use my knowledge of loan qualification and I use your affordability to own a home in dollar terms. When you, as a prospective buyer, contact me for home buying activity, typically we have a one-on-one meeting. In this meeting, I try to understand your needs and wants for the housing market. I ask you questions to understand your financial position, like your income, your debts, your savings, and collect certain financial documents from you. Analysis of your income, your debts, your assets allows me to qualify you for a home that you can comfortably afford.
Got it. So, Amit, can you tell me that what kind of documents do you typically require? कि अगर I for one just come to you and say, hi, मुझे ये घर हमें decide किया है कि घर लेना है. तो उसके बाद you said that you'll ask for some documentation to even understand what is the affordability. So, what kind of documents do you typically require?
Typically, the loan qualification is a straightforward process for many salaried borrowers. So if you have a job and you get a paycheck per month, then I typically collect your 2 years of W-2s. Mm-hmm. Those W-2s basically tell me you have a consistency of income.
Got it.
Then I look at your pay stubs to make sure that income is still continuing. Okay. And then I have to look at what kind of savings you have. And those are your assets, like your bank statements, your stocks, bonds, or maybe your 401k and IRA statements. And I kind of look at all that, and that tells me that you have some level of down payment, so you can put your own skin in the game. So when the lender is willing to give you the money, they will give you at very attractive interest rates. So those are the typical things that I require when I trying to do a pre-qualification.
Okay. एक और चीज, which I have faced when I'm buying a house is that you kind of undecided whether you both want to, as in the husband and wife, दोनों को ही आप pre-qualify करेंगे या अलग-अलग करेंगे या as a family करेंगे. तो how does one go about that process?
Well, to start with, I always suggest that everybody should kind of run their credit report, because we don't know what each other's credit report is going to say. Okay, so having the information in hand is always useful. So when a family comes to me, or 2-3 borrowers who want to buy the home together come to me, I will run a credit report for each one of them. And when I run a credit report for a married people, it costs a lot less than running it for an individual.
Okay.
And so maybe it so happens that both of you are working. I mean, husband and wife are working, and your scores are great, and you qualify for a lot more home. Maybe you may have a situation where you say, hey, maybe I'm just going to qualify for one person's income based on that. And then I may either qualify you based on either person's income and tell you, okay, if you just go with wife, this is how much you qualify for, this is how much you can qualify for if you go with husband. And another thing that comes into play is your credit scores. Now, as long as your credit scores are great, you can go either way, okay, depending on which way you want to go in buying the what level of home and things like that. But if one score is lot lower than the other, the lender will typically consider the lower score to give you the rate. And in that case, I would suggest, hey, I mean, it's probably a better idea not to put the person with a lower score on the loan. Okay, so we buy the house in the name of one person, but we can always add the spouse as an additional person on the title without being affected by the loan. So it's again involves like really analyzing. I mean, if you both like a home that's $1 million and both of your income is required to qualify for that, I can't help it, but you have to kind of use the lower score to kind of get the rate that you're going to get. Okay, so there are some compromises that one has to do to figure out what they qualify for and what they like to buy.
Okay, तो आपने ये mention किया it should be a great credit score. So could you please help us understand what is great? Is 700 considered like a decent one and 750 is great? How do you consider great?
That's a good question. The highest score anybody can have is 850. Okay, there are 3 bureaus, the Experian, TransUnion, and Equifax. And those bureaus will give you the scores. The lenders will typically use the middle of the 3 scores. They will take out the highest score, they will take out the lowest score. So if you have gone to a car dealership and they give you a score of 750, that may not be your middle score for mortgage purpose, number one. Second thing is the mortgage-related scoring models are different than the car buying scoring models. Or if you want to go for a rental, those models are different. So the thing is, you really need to get a credit score that is related to mortgage. Even if you run your own credit score on a free credit score websites, that's still different than what your mortgage-related credit score is going to be. Okay, so you really need to have somebody who is licensed like myself to run your credit score, to understand what's in your report and how that affects your ability to buy. Now you asked me which credit score is great, which is not. So if you look at a credit score of like say 850, of course that's great. So typically on a conventional loan, 680 and above, you can always get a loan. If you are in an FHA buyer, you can go down even below that, close to like maybe 600 or 580 range. But then your interest rates are higher. It's a cost of credit. That's where you end up paying higher interest rate for that. So they have these brackets from 680 to 699, then 700 to 719, 720 to 739, 740 to 759, and 760 and above. So 760 and above is a great credit score. Okay. Now, if you want to get a high balance loan where you have to get a loan of 800,000, which is not a government loan, then a lot of lenders will require to have a credit score of 780 and above to get you the good interest rate from that standpoint. So it just depends on where your credit score lies and what you're willing to buy and what you're going to live with.
Sure. Let's take this call. Hello, you're on air.
Yeah, I have a question.
Sure, go ahead.
Hello, what's your name?
Shobha.
Hey, Shobha, Own Sweet Home. How can I help?
Yeah, you mentioned that you can have a family member be not on the loan but be on the title. So what does it mean? This person jointly owns the home?
Yeah, if you have applied for a loan collectively, then yes, you own the home jointly. Okay, you cannot take the person off the loan. But in other case where one person qualifies, you can always add additional people on the title. So the home ownership document, the title document, is a bit different than the loan guarantee document that somebody is saying, I'm going to pay off the loan. Is that what you're asking, Shobha?
Oh, I see.
Yeah.
Yeah, so if something happens to the person who owns the loan, then the other person who is on the title, do they have to then refinance and buy the home?
Something happens, meaning the person is kind of passes away.
Yeah, it does. Yeah.
Right,
Mm-hmm.
right. So, and there are ways to do that. I mean, you may not have to refinance it. I mean, I'm not quite sure on the process involved in that, but if I'll definitely research for that. I mean, if you call me after the show, I will take down your number and then try to research that more, because I haven't encountered the situations like that as far as the person on the title passing away, and then what happens to the you can still continue to pay off the loan as another person. You don't have to refinance, as far as I know. Okay, but I'll give you the right answer later on.
Thank you.
थैंक यू फॉर कॉलिंग. और अगर आपके पास भी कोई भी क्वेश्चन है, आप हमें अभी कॉल कर सकते हैं at 510-770-1550 and ask a question on air. However, if you are unable to get on, then you can always submit a question for a personal response. Just go to Amit's website. It's called Own Sweet Home, like, owning a sweet home.net, and click on the radio show link to submit your question. And then also, by any chance you forget this wonderful website's name, you can just Google Amit Inamdar, and then you can get the website straight away. So it's a very simple task that you have to do. And हम लोग इस शो में कोशिश करते हैं कि हम लोग आपको काफ़ी सारी इन्फॉर्मेशन दें, रेलेवेंट टॉपिक्स पे डिस्कशन करें, और आपके जितने भी क्वेश्चंस हैं उन सबको आंसर करें. We'll be right back after this very sweet and quick break.
Have you joined the Happily Ever After Club?
Happily Ever After Club?
हाँ, Happily Ever After Club. Membership is automatic once you buy your dream home from Amit Inamdar. He's both real estate and mortgage broker. One stop, no need to shop.
Oh, Amit Inamdar from Own Sweet Home.
Yes, that's Amit from OWN Own Sweet Home. Call him today, 510-364-6686. Again, 510-364-6686. Or visit ownsweethome.net. That is ownsweethome.net.
Hello listeners, welcome back. This is Amit Inamdar. Do search my name on Google, and if you want to meet one-on-one or just get connected, call me based on what you find on the website. My number, my email, everything is up there. Also, if you are planning to buy, sell a home in near future, call me for a no obligation initial consultation. So coming back to PowerStart Loan Qualification, there are situations which can make the loan qualification process a little bit more complicated. Those are the situations where the home buyer, for example, is on an immigrant visa. The lenders require you to have at least 6 months, or maybe some lenders require more than that, remaining on the visa to make sure once you buy the home, you're going to stay in there and there is enough time to renew your visa status and things like that.
Sure.
If you have a situation where you are a business owner, then you of course need to figure out whether your business is a loss or your business has an income, and those things will be used in your qualification process. And a lot of times people open up a business, they show up the loss to save on the taxes, and at the end of the day, when the time comes to loan qualification, the tax records are what lenders go by. And they look at it and say, oh, you have a $10,000 annual loss, and they will divide that by 12 and say, okay, that's around $850 or some dollars per month, and they will deduct your income, or they will consider that as your debt, and your debt ratios will climb, and then you will qualify for maybe around $150,000 worth of less home just because of that. So be careful when you do your taxes, and especially when you are buying the home, those things do come into play. So I will have to look at your business taxes, personal taxes, the K1 incomes, the partnership returns, and things like that to qualify you based on any specific situation that you may have.
Got it. एक चीज बहुत बारी हम लोग सुनते हैं, this word called pre-qualification and then pre-approval. What is the difference, or is there a difference at all?
Definitely, there is a difference. I mean, if you want to get pre-qualified, I mean, I can do that the moment you call me, asking you like few questions. Because all I need to know is your income, and I ask you what your debts are. I'm not doing any verification at that point. Okay? So I'm just saying, okay, based on the information you gave, I think you qualify for a $600K home. And the person will be happy to know that. And that would be maybe a first step just to kind of roughly know. And you're always welcome to call me and find that out. Now, if I want to get you pre-approved, then of course I'm going to run your credit report. Okay, so I will know your credit score. I'm going to look at your debts. I'm going to look at your tax returns. I'm going to look at all the asset, income, and down payment and debt situation, and come up with some kind of ratios. And those ratios are called like a debt to income ratio, or loan to value ratio, or down payment to value ratio, and things like that. And those ratios will tell me how much, whether you fit in that particular parameters for the lender. And once I know that, there is I have an ability to run your loan application, if you choose to fill one out, through a Fannie Mae or Freddie Mac approved loan processing systems. And once I do that, it comes up and says, okay, I mean, this particular loan is Fannie Mae eligible or Freddie Mac eligible. And once I know that's eligible, that means any mortgage lender or a bank that's going to give you the loan is able to sell that loan to Fannie Mae or Freddie Mac. So they give them their money for the loan back so they can give it to another person. And that's called churning. So they churn that money so that more and more home buyers can buy the homes. And the government entities that Fannie Mae and Freddie Mac will actually securitize this and actually sell it in the secondary market. Something that we saw happen in a wrong way in the 2008 mortgage crash. So that's the difference between a pre-qualification and a pre-approval. So you kind of get both in a way, but then when you're really serious, I think the pre-approval is the way to go.
So in other words, if I understand it correctly, pre-approval is a more thorough process.
Absolutely.
Where you are more assured कि अच्छा यार this is where I stand versus pre-qualification. एक और चीज जो हमारे किसी listener ने हमें भेजी है is a question on whenever you run a credit report, there is a difference that happens on the points.
Mm-hmm.
Now, suppose we actually, bid for a house. So you come in and you're like, all right, this is the loan. I mean, you actually fill in all the process work from your end. And that loan, I mean, you don't, win that bid, somebody else does. How long, does that score really stay with you? Agar, within a week or within 10 days, you want to bid again for another house, do you keep the same score or do you actually, start the process again? How does that work?
Okay. So typically the lenders will consider a credit report that is run in last 90 days as your current credit report. So every 90 days, I would say you have to run the credit report to kind of make sure that you are you basically, your credit score hasn't changed and you basically qualify the same amount that you previously did, because a lot of times in 3 months the interest rates may change, and the interest rates change may actually lower your qualification. Like when the interest rates went up from 3.5% in month of May to like almost 4.75% in month of like June, July, August time frame, people's qualification dropped by $100,000 to $150,000. And people didn't even know, and they were still looking for the same priced homes, and rates went up, but but the home prices didn't come down to match that qualification. Because what happens is, if you don't qualify, there are other buyers who qualify. So if there are 20 offers on the house, maybe 10 more people will qualify for the next home, not the 19, even though one got the home. The other 9 just don't qualify. And those things go on. Now, coming back to your second point, where how often you run your credit score, and I have seen this many times, like clients will come to me and say, hey, Amit, I don't want you to run my credit score. I just ran it at some other place, and I don't want my score to go down. Now, what the bureaus consider for mortgage purpose, because they know that any time somebody wants to buy a home, they're going to shop around. And if you're going to shop around to get the best possible rate as a consumer, you shouldn't be charged more money, or basically in terms of interest rate, or your score should not go down.
Right.
So what they do is they say any number of credit hits in the 30-day period will be considered as one hit.
Oh,
okay. So your credit score doesn't go down. I mean, if it goes down just because maybe you ran and you say, oh, it did go down, and how did that happen? And that because maybe one of your credit cards or something passed through some time phase where the credit support report is supposed to update itself. And that's what really happened. Now, I don't want you to go out and start running this credit report every day, because after the 31st day, the first day's report is going to be the one hit, and the 31st day is going to be second hit. Then the second day is going to be the second hit, and so on. So in another next 60 days, you'll have 30 hits on your credit report, and I don't want you to be doing that. So be reasonable. I mean, typically when you come to a broker like myself, when I run your credit report, that's good for all the lenders I apply for. I mean, I'm approved with like 120 lenders with me.
Wow.
So I have different types of loan programs, different types of banks, and the lenders, mortgage lenders, who specialize just in mortgages. So once I run a credit report, it's good for everybody. But if you yourself start shopping around, I mean, you may go to the big banks and actually get your credit score at one bank, on the other bank, and you may not know where the best deal is. And as a broker, that's the value we add, having multiple lenders in our qualification process, figuring out what their special criteria are, and then based on the criteria, whether you fit into that to get that best possible rate. And that's what we actually do for our borrowers.
That's wonderful. I think ये जो real estate का जो पूरा process है, Amit, I think education is really the key. It's not about just, going in for money. It's about getting the right education. Somebody like you guiding somebody to, through the entire process, hand-holding them and telling them, these are the pitfalls, avoid them. Yeah. That's really wonderful. Thank you so much, Amit. आप इतनी सारी हमें tips दे रहे हैं. Any tip for somebody who's looking for or going for an open house this weekend?
Well, the tip today is basically, as of January 1st, 2014, the qualified mortgage rules are going into effect. That means the amount you will qualify as of January 1st will be a lot lower than the amounts you will qualify for today. Oh, okay, the debt ratios are changing from 45% down to 43%. And that may cause up to $50,000 worth of qualification change in your qualification. So if you're looking for a $700K home, suddenly you will realize you now qualify for $650. So it's in your interest to make that decision quickly. Call me and we'll make it happen for you. It's my commitment to you that I'm making today, that once you decide to buy, I will take you through the process and make sure you get into the right place.
Absolutely. Thank you so much. And jitne bhi hamare listeners hain, I'm sure you are all tuned in and listening to this show. We come every Friday between 4 and 4:30 and take up a topic and make sure that we dissect the topic completely so that you understand more about real estate. Agar aapke paas koi bhi question hai, you can always visit Amit's website, which is ownsweethome.net. Own is OWN, sweet home. Just say you're owning a sweet home. That's what Amit really wants, and that's what you also want. So it's a win-win situation for both of you. Just visit the website. You'll find tons of information there. In case for some reason you are like, "Arey, kya naam tha us website ka?" All you have to do is type in Amit Inamdar on Google, and you'll find all details regarding Amit over there.
Own sweet home, own sweet home. I dream of my own sweet home. Right here, right now. Amit Inamdar will show you how. Call Amit and you are set. Or just visit ownsweethome.net.
Only real estate show filled with credibility, authority, and expertise. Every Friday, 4 p.m. only on Radio Zindagi.